The US economy has gone through a lot in just the last few days, and it started with Moody's downgrading the United States from a AAA rating down to a AA1 rating because they're concerned about our national debt and the government's ability to pay back that debt. Then number two, Walmart said they're going to raise the prices of their groceries because of tariffs, and President Trump was not happy about that. And then to top it all off, number three, Jamie Dimon, who is the CEO of JP Morgan Chase Bank, said in a warning that investors need to be cautious about this booming stock market. So let me break all of this down in this video, starting with what's going on with Moody's. Moody's is one of the big three credit rating agencies, and they downgraded the United States because they're worried about our national debt levels, and they're worried about the government's ability to pay back those debts, because they say that our expenses and national debt is rising faster than our income, meaning tax dollars. Here's what Moody's had to say, quote, "While we recognize the US's significant economic and financial strengths, we believe these no longer fully counterbalance the decline in fiscal metrics," meaning we Moody's believe that the United States government is very strong. We know that you have a very strong economy, but because your government keeps spending so much money, we don't know how you're going to pay back all of that debt, which is why the United States was downgraded. But they also cited the Trump tax cuts. Here's what Moody's had to say. If the 2017 Tax Cuts and Jobs Act is extended, and that's what President Trump wants to do, it will add around $4 trillion to the deficit over the next decade. Meaning, if you pass these tax cuts, that means the government is going to bring in less money. While we're still spending so much money, that's going to increase our national debt, and that's going to increase how much money the government has to borrow every single year, which is our national deficit. But this is where the Trump administration disagrees. Treasury Secretary Scott Bessent responded by saying, quote, "Moody's is a lagging indicator, and that the data they're looking at is from the Biden administration, and they haven't taken a look at the economic growth under the Trump administration," and that's where the Trump administration says Moody is wrong, don't trust them, but ultimately time will tell. But the thing that I want you to understand about this is this Moody's downgrade did create more concern for investors. It caused investors to sell off United States treasuries, causing interest rates to go up, which also meant mortgage rates went up, car loan rates went up, and business loan rates went up as well because of this downgrade. So let's see what happens over the coming days with that as well. But then we have what's going on with Walmart. Now, I want to remind you that my team is covering this every day in Market Briefs. Market Briefs is my free financial newsletter where every day my team is working to break down what's happening in things like the economy and stocks and housing and crypto and the global economy into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that read Market Briefs every morning. Plus, when you join Market Briefs, you'll also get access to my investing masterclass as a bonus just for joining. So if you want to get Market Briefs plus my investing masterclass all for free, all you have to do is click the link below to sign up. Walmart is now the largest retailer to pass through tariff price increases onto retailers. Here's what the CFO of Walmart had to say, quote, "We are wired to keep prices low, but there's a limit to what we can bear, or any retailer for that matter," which is why Walmart is now raising prices. Now, I've been talking a lot about tariffs. There's still a lot of uncertainty as to what's going to happen with tariffs, but Walmart is saying that now because they have to pay more money to get their goods, they're going to have to charge you more money for your groceries and other Walmart items. And of course, President Trump was not happy. This is what he posted on Truth Social. Quote, "Walmart should stop trying to blame tariffs as the reason for raising prices throughout the chain." Then he goes on to say, between Walmart and China, they should, as is said, eat the tariffs, in all caps, and not charge customers anything. I'll be watching, and so will your customers. Now, we've talked about this a lot. Again, tariffs are a tax. They're a tax paid for by the importer, meaning if you are Walmart and you're buying your goods from China, and now you have to pay more money to bring those Chinese goods into the United States. How much are you paying? Well, it used to be 145%. Now it's supposed to be less. We'll ultimately see where tariffs go on July 8th. But the whole concept is Walmart and other retailers selling goods from foreign countries are now having to pay more money to get those goods, which is why Walmart says they're going to have to raise their prices. Will things change? I don't know, but this is why a lot of people are concerned that inflation could be getting worse. The Federal Reserve Bank also says that inflation could be getting worse in the coming months because of tariffs, but there's a lot of uncertainty because we don't know where tariffs are going to be after July 8th. That's when President Trump is going to make the next big announcement on tariffs. That's when the current tariff pause is going to end. So we don't know what's going to happen until July 8th, but we can start to see that there's a chance prices of things could go up because of tariffs from what Walmart says. This brings me to what Jamie Dimon, who is the CEO of JP Morgan Chase Bank, had to say, because he recently in an interview said this, quote, "The market came down 10%, back up 10% very quickly. I think that's an extraordinary amount of complacency." What does that mean? In the financial world, market complacency means investors are overly optimistic and they disregard risks in the economy. So Jamie Dimon is saying, I think investors are ignoring economic risks. They're ignoring risks about the economy. They're ignoring risks about inflation. They're ignoring risks about everything else happening, and they just keep buying, which is why anytime you see these dips, they're jumping right back up. And we saw this a lot over the last few months, where when the first announcements of tariffs happened in February, markets crashed, and then tariffs paused, markets rallied again. In March, we had another announcement of tariffs, markets crashed, then tariffs were paused, and markets rallied again. Then came April, and now we had the big Liberation Day tariffs, and markets globally crashed, and then about a week later, tariffs were paused, and markets rallied again. And this is where Jamie Dimon says, I want you to be a little cautious here because when you have that type of volatility, it can create concerns about the markets. In fact, the Citigroup CEO also chimed in saying this, quote, "Companies are pausing decisions, delaying capital expenditures, meaning delaying big investments into the companies, and they're holding off on hiring. Many are preparing for second and third order effects from demand shocks to supplier uncertainty." Essentially saying that a lot of businesses are unsure about what's going to happen in the economy, which is why they're holding off on business spending, creating concerns about the economy. What does all this mean for you? Well, if you are a long-term investor, all of this means really nothing. All you want to be finding is the opportunity. There's a lot of noise out there, and a lot of people tend to panic when they see headlines such as Moody's is downgrading the economy, and they say, this is why the dollar is going to collapse. This is why the economy is going to collapse. They hear the news that Jamie Dimon is saying that investors need to be careful, and they say the stock market is going to collapse. And so it creates a lot of fear and anxiety, and people tend to run away. But I want you to do the opposite. I don't want you to do what everybody else does. Instead, I want you to, number one, stay calm. Then number two, I want you to look for the opportunity. Because if you are a long-term investor, all you want to be doing is accumulating assets, period. The key is to accumulate good assets. Now, I'm not going to go over how do you analyze an asset in this video because that's going to go beyond the purpose of this video, but the whole idea is you want to just work to own ownership of good investments. And when things go on sale, that allows you to buy more investments at a discounted price. So your job should be to find good investments and buy more when they go on sale. And that's why if you are a long-term investor, you don't want to get kind of pushed in one direction or the other because of the news. This is why I'm such an advocate of market briefs, because we don't have to have all that sensationalism. All of the news is in one email. But the thing that I want you to remember here is that the people that build wealth are not the traders, it's the investors. And a lot of people think that they're going to become investors. And then you start to hear negative headlines or you start to hear positive headlines. And now all of a sudden you feel like you need to buy or you need to sell because of what's happening in the news. But this is where I want you to take a step back and I want you to remember to stay calm. Because the reality is we're probably going to see a lot more crazy news over the next 3 to 6 months, especially because of tariffs. Especially because the Federal Reserve Bank doesn't know if they should cut interest rates or raise interest rates. And when you have this much uncertainty, from tariffs to the Fed to inflation. It creates a lot of uneasiness and it creates a lot of uncertainty. And the one thing Wall Street does not like is uncertainty. That's why you start to see more and more people panic. You see more and more people freak out, and you create a lot of this anxiousness about the market. But I want you to just stay calm and remember your strategy. If you are a long-term investor, none of this day-to-day stuff matters. In fact, what you should be doing is remembering your system and sticking with it. If you're doing dollar cost averaging, let's call it ABB, always be buying. Well, now you just keep buying. If markets go down further, you can buy even more. If you're more of an active investor, you're looking for what I like to call market shifts, and now you want to be more involved with your investments, great. Now, when you see things go on sale, when you see uncertainty, that creates an even better buying opportunity. Or you can look at how do these higher interest rates or concerns about the United States credit create a better investment opportunity. That's the way that I want you to be thinking, because while most people are freaking out, Wall Street's working on getting rich. And that's the way I want you to think, because this is how our economic system works. Investors are becoming wealthier who know how to control their emotions. And if you can't do that, you are the one that's losing money, selling your stocks or other investments at a discount to smarter investors that are now able to build wealth because you sold at a bad time. And that's why I want you to remember your goals. If you are an investor, you should have a long-term horizon, not 6 months, not even a year, 10 years plus. And everything else happening between now and then is just noise. So a lot of craziness happening in the economy. Chances are it's going to get even more crazy. Stay calm, be smart with your money, find good investments, and work to stack assets. And with that, I will see you on YouTube tomorrow.